Good morning. Welcome to Beyond the SEAF Model. I'm Jack Kosar. This is effective for the week of April 13th, 2026. Let's get started. SEAF signals for this week. We retain utilities and technology, and we pick up industrials and drop energy. Energy had another outflow, 11 on the trading week, bringing it down to a total score of 18. Obviously, we're still holding on to some of that residual strength that we had over the first 3 months of the three and a half months of the year. So holding up here in neutral territory, but starting to drop in the tactical month, and obviously last on the strategic or on the trading week, negative 1.02% outflow here. Industrials coming up strong here with trading week of 2, along with the tactical month of 4 and 3 for overall ranking of 9, which is pretty solid. Utilities hanging in there despite a little bit of weaker flows on the trading week. And again, energy last on the week. Otherwise, consumer staples kind of drawing down around here at the bottom. And so the SEAF model's done really well this year. Really identified a lot of the right places to be in the sectors. Technology seems to be reemerging as there's been some reports out that some of the revenues from AI are starting to be generated and instead of just spend. So, we're seemingly cycling through these sectors correctly here. Taking a look at our heat map. Overall, last week with the advent of the ceasefire, flows were up 2.29% overall for the 11 sector spiders. So we saw Russian money back into the market as things were told to us that it was quieting down over in the Middle East. I think that's still to be determined, but the market believed it. So that's all that matters here because we're just following the numbers. 3 out of the 5 days were up days, with Wednesday being the greatest day with 1.9% inflow on Wednesday itself. Again, overall seeing those that money flow through. Technology coming in at 1 on the trading week with a 0.67. Nice, really strong flows here for technology. Seeing that really start to abate into the tactical month as well, and still being held up by the strategic quarter as the assets flow off. But as we continue to see these positive flows on the tactical month and the trading week, it will start to knock out some of these flows for the quarter. So, but technology doing the right thing, starting to kind of trend in that right direction. Industrial, same thing, 0.33 inflow on the week, which is really good for the number 2 on the trading week, and starting to pick up some accumulation on that strategic quarter. Again, seeing that reverse on the flow with energy. This table overall is starting to realign itself. We still have some of these reds kind of trickling in as there was some really strong outflows, both in the financials and technology for quite a while. So it takes some time for those to flow off. But that accumulation mattered. So that's why it sticks in here. But, we're seeing majority reds here at the bottom, majority greens here up at the top. That's, when we're at inflection points and coming out of them, we like to start to see this particular table start to align color-wise. And that is the case. Total sector AUM. We broke back up through that 21-day moving average as we had a nice strong inflow. This was after the ceasefire was called and things were apparently supposed to be calming down in the Middle East. Money started to flow back into our markets, being a little bit less hesitant. Money flows came in strong, as we can see here. That corresponded here with the uptrend here, the positiveness in the S&P 500. So we broke back above. We'll see here. This 358 billion was all-time highs for the 11 sector spiders, and we're sitting above that 21-day moving average, which means we do have room to run here on the SPY chart. Again, this isn't the end-all be-all of charts, but overall has done a pretty good job of telling us A, when we're inflection points, and B, when there's room to run versus when there's time to be concerned, and we are back in that positive room to run aspect of things. Heading into our rainbow charts, looking at industrials first. Nice positive, neutral into favored. See a nice small uptrend in that relative outperformance versus SPY. This was after a nice long run up in industrials prior to that, from really December of last year through the end of February. We had that nice run of strong industrials, a little bit of a breather break, and we seem to be attempting to resume trend here. So a good place to be for industrials. Utilities. Utilities had a nice little run up here since January. Strong relative outperformance versus SPY. We spent a lot of time into favored here a bit with that little brief interlude. But overall, strong uptrend in utilities. Looking at right now, we're about in that middle favored. So I would like to see some stronger flows here. Utilities 6 on the trading week, being held into this kind of accumulation that we picked up later, but still in a little bit of a strong uptrend, going up and down through its relative performance versus SPY. Lots been happening in the market lately. We're in a ceasefire, we're out of a ceasefire, wars. Oil prices going up, oil prices going down. So been a little bit of turmoil, but overall positive uptrend, still in that favored, still a SEAF signal. So good place to be. Technology. Technology has been largely sideways going back to September, October of last year in terms of its relative performance versus SPY, a bit on the downward sloping, but as of late, as we've come up from a void into neutral, up now into favored, picked up this nice little bit of relative outperformance versus SPY. There's a little bit of congestion here in terms of resistance on the relative performance side of things, but as long as we continue to see strong flows like we did this week, this thing can get itself into its upper favored, start to drop off some of that quarterly void that we were accumulating in terms of assets flowing out of technology, and really giving this trend a little bit of room to run. Again, we're not projecting cash flows here. I'm not making any kind of predictive statement, but again, as long as we continue to see strong flows, which we have in the tactical month, in the strategic tactical month in the trading week for technology, those flows continue. We can continue to see this thing get higher into favored as these flows from the strategic Carter start to flow off, and we can hopefully continue this positive relative performance that we're seeing in technology. Energy on the reverse end, the key concept here in SEAF is that this money likes to stay in the sector family, and it likes to flow between sectors. As you can see here, we had some outflows for energy, really strong outflows. So that money was leaving out of energy. We see that relative underperformance since that money has started to leave, and we start to see money flow in. So you can see this is kind of a mirror moved here. We got from avoid neutral into favored. We're down from upper favored down to neutral and heading toward avoid. It looks like some of this money maybe swapped. So that's kind of the overarching theory behind this money's got to stay invested in the S&P 500. It's got to stay invested in equities, but it's allowed to shift between equities depending on how the managers are aligned for themselves in terms of their sector allocations. And technology is looking positive, and that some of that asset flows out of energy look to have moved into technology. Like I said, energy. Financials, just wanted to highlight financials, kind of been mostly in a void area, really going back to October of last year. Overall downtrend for almost the entirety of 2025 into 2026, seeing a little bit of life on the relative performance versus SPY chart as we've kind of come in, played with favored up into that, a higher neutral, lower favored area, some modest relative outperformance versus SPY, just an area to keep an eye on. Financials one on the tactical month in terms of flows, so picking up a little bit of accumulation, 3 on the trading week, really being held back by that, strategic quarter. But as long as we continue to see assets flow into financials, some of this quarterly outflows will start to fall off, and we'll start to build momentum positively. So not a bad launching spot here in terms of for financials, not a SEAF signal, not a lead off, but just seeing some positive things happen here. And I wouldn't be shocked if they continue, that we don't see financials move further up the board. Last but certainly least, we have consumer staples, our worst ranked sector right now in that mid of void. Consumer staples was on kind of this long underperformance trend going back to last year. Came out of it a little bit as we hit a little bit of favorite in that late January, early February into March, and we're starting to kind of slide back down. As you can see here, a bit, flat, but slightly down in terms of its relative performance versus SPY. And this continues. We're going to retest these these relative performance support levels here. One from October. And another one from January of this year. We got a little bit to go there, but that's where kind of the trends are. 11 on the tactical month and 10 on the trading week. So starting to see those outflows here for consumer staples. That is all I have for this week. I look forward to breaking down the SEAF model with you all next week. And thank you.